The year is 2020. As the old financial empires collapsed and crypto drowned in noise and false prophets, one man lost everything. And in that loss, he was called. Through the wreckage of his own failure and the precision of his charts, a higher force revealed what others could not see and entrusted him with a mission to guide others through the chaos he barely survived. They call him Sacred Prophet. And now, the revelation is yours to claim.
Welcome, everyone, to Sunday Fuel for September 7th, 2025. Is Bitcoin boring you? Is it moving sideways and setting your emotions into the doldrums? Did you hope that you'd be flying high at $400,000 right now and that you'd be looking at buying new houses and Lamborghinis? Well, you're not the only one. I, too, am pretty frustrated with the price action for Bitcoin. And it makes me think I have to look at the bear case for what it means if Bitcoin has topped.
No.
Hey, I'm Sacred Prophet Tom Hartman, your humble leader, joined as ever by my Aaron in training, Peter Bad Guru Hartman. Say hi to everyone, Peter.
Hi to everyone, Peter.
That's me leaving space for my brother to participate.
Thank you. Thank you. How noble of you.
Peter, there is potentially a cure for the born Bitcoin, the Bitcoin doldrums, the sideways price action for Bitcoin. A recession. But before we get to that, let's talk first about Bitcoin for the last week. So this is the first week we've had where Bitcoin actually did the weekly trade. If you guys remember, Bitcoin has just been falling, and has not been moving up to our weekly level. But last week, the week of Bitcoin closed at around $108,000, and the idea is that we would move up to the weekly level here at 110.5. Well, not only did we get there, we blew past it. Where did we go to? We went to the next daily level, which is right up here. All right, Peter, this is why it's important to have the indicators on your chart and not only to rely on me for the analysis. You can do this yourself. Even a chart monkey like you, Peter, can do this. What does it mean if Bitcoin not only moved up to our weekly level, but passed beyond it to the next near?
That's dramatic. That's real dramatic. I like that.
What does it mean when Bitcoin...
Who's the chart monkey now? Sneeze monkey.
What does it mean when Bitcoin moved up to the weekly level? Not only moved up to the weekly level, but moved beyond it to the nearby daily level above.
It means that 150 Bitcoin. That's what it means.
That's right. It's a bullish sign, right? Because the bearish signal would be that we hit up to the weekly level, turned and fell, right? If we did this, moved up over here, turned and fell, it'd be Mordor is coming, right? Winter is here. That didn't happen. Not only did we move up above it, we've been hit it against this trend line, and we've been staying above the weekly level, right? We stayed above the weekly level for the week. Now, I'm speaking too soon. That weekly level is currently at, we're currently in the 110.5 zone, 110.6. And as long as we stay above that level until 10 p.m. tonight, Eastern Standard Time, chances are we've broken the down streak.
That sounds good. That's good news.
It can happen, but we've all seen what happens on the last 2 or 3 candles before the week closes. Tells the whole story. As anyone's been watching me live trade on Price Action Live on Traders Post Tuesdays to Fridays, the last few candles inside of the main candle that you're looking at, if you're trading a 50-minute chart, the last 3 minutes, if you trading the day, the last 3 hours, and that sort of thing, has everything to do with like what the nature of that candle is. It can look beautiful and then get completely crushed at the end. So never make any decisions until the close of the candle. That's why it's so important. If you're going to make a decision before the close of the candle, you're risking it. So last week, we had the price move up to the weekly level and moved all the way to the daily level, cleared it, pulled back. So the week is going to start off now neutral, which is what we need. Now, a neutral does not mean we're going to move directly into bullishness, right? It means that we're going from this red downtrend to a yellow period, and then potentially we have to continue the red down, which means look out below, negative 33% or more. And if it goes up, well, blue skies, Michael Saylorland. Bitcoin is energy, velocity, spinning at the speed of money. I got it right.
I think you got it right. The gist of it.
Yeah, but right now we got to sit on our hands and wait. But it is it is encouraging that that's what's happening with the price. All right.
But what doesn't that trend? Isn't it showing? Isn't that your trend indicator showing yellow, red, red? Isn't that bad?
Here, yellow, red, red, yellow, yellow, red, red. No.
Yeah.
No. The bad part is when you get this. Or the first bad part is this: when you get the massive move up beyond the green. That's where you can get this pullback. And in fact, if we're going to take a look at, let's take a look at a longer chart for Bitcoin. All right, let's go Bitcoin on the daily. Let's add our trend indicator. And we'll put that for, let's try the month. No, I think it's 3 months. All right. So you see the signal over here. This is Bitcoin, the history of Bitcoin with our trend indicator on there. Let's even remove some of these to make it a little bit clearer for you. So we have the green, obviously, during bullish trends, red during bearish ones. And right now, when we're taking a look at the long-term chart for Bitcoin, it's just been yellows and greens all the way up. We haven't even
started. This is on what interval? This is 3 months?
This is the daily Bitcoin with a 3-month trend. So we haven't even gotten, not only have we not gotten into major bullishness, you see the size of these candles, these zones. Mm-hmm. Not only did we not get into there yet, we're still like down in these baby areas. We haven't gotten big areas like this that indicates just blow off top, euphoria, hype, the whole thing. We haven't gotten that yet. We're not even yellow. So when we're seeing this red area right now, it's not something to necessarily panic over. It's in fact pretty healthy. We're expecting red pullbacks before green continues, if it's going to continue at all.
Gotcha.
Now, this was a little bit more, this second red area was more than I would have expected. One red, one red, one red. These things are normal. But a big red like this, that's where things were like, okay, what's going on over here? Why is there so much selling pressure on Bitcoin, especially since we're not getting massive longs levered at all? Mm. We're not getting hype and we're not getting any levered long. So what's the sell-off that we're experiencing? So it seems to be more about market participants and not through technical analysis. In other words, manipulation of the markets, people making it go down.
You underestimate my power.
Have a desire to sell, can underestimate how far a price can go. But we are seeing the first signs of moving to neutral, which then go to bullishness. All right, for the week ahead. If we stay above 110.5, what do we expect? What would be the bullish case or the bearish case for Monday, Peter? What do we expect to see on Monday if we expect this the bull case for the rest of the week?
Marauder Monday is the opposite for the rest of the week. So if we want to see it go up for the rest of the week, we should see it go down for the on Monday. So it goes down.
Exactly, Peter. Exactly. You got that right. How does it feel?
Feels good. Feels good.
So if the bullishness is going to continue, you might ask yourself, Tom, should I get in now? Should I just get in now and ride this bullishness up? Yeah,
Right.
if you can handle a one, being potentially wrong, and two, more than 2% pullback on Monday, right? Since if we trade at 50x leverage, that means we can only suffer a 2% drawdown on the position before it gets liquidated. 2 times 50, 100. All right? If we're trading at 50x leverage, we better get in when we're expecting that we're not going to get a 2% pullback. Because then there's no point. You'd have to try again later on. Now you might say, hey, I don't mind getting in 1, 2, 3 times because I think we're going to have the rocket ship up. Fine. But just know that's what you're doing. So I would rather see a drop on Marauder Monday and the drop on Marauder Monday for it to confirm or pretend a bullish trend. We don't want to go lower than the local low we had recently, which is 107.3. So we don't want Bitcoin to go below this level, close below this level, not just wick, but close below this level on Monday to Tuesday morning. If that happens and we get the pullback there and it doesn't close below and starts moving back up and we get above this trend and above 105, then we might be able to expect a larger bullish move. And if that larger bullish move happens, we still have, let's see here now, we still have something like $20 billion worth of shorts, at least, that need to get liquidated. We're only at around 400 million longs. So this number for longs is actually higher than it was last week. Last week, we were at 100 million longs. That means there are 4 times more longs now than there were last week. But we had 20 billion shorts last week too. All right, so those shorts still need to get liquidated. That means the move up that we're having on Bitcoin could be, the small move up here from the bottom could be this 3 to 6% move. Seems to be just a natural buying pressure that would be there in a bull market, not even levered positions necessarily. And that if we still have 20 billion to go, it's roughly about a 1% move for every 1 billion short that gets liquidated. Same thing for the other side for long. A 20% move up from over here would get us to the 130,000 Bitcoin area, which we wouldn't even be talking about the bear market anymore. It'd be like, let the good times roll. We're moving up. We're moving up.
Right.
So that's for the week ahead. We want to see what happens on Marauder Monday. If we pull back significantly, we don't close below the new low, and we move up after that, okay, then bullishness, I would start taking long positions. If we get the opposite and the price moves up, and it can move all the way up to the previous weekly level of 114. Heck, it can move all the way up to 120, right? These are previously unmitigated levels over here and over here, right? Marauder Monday, it can do that and then fall for the rest of the week, guys. That's just what we call a lower high. That's all that is. Don't be surprised if that happens. So if we get this ramp up over there and that's what happens, I'm going to be like, one, I'm not going to be getting in. Not expecting the low, but just because I'm not going to get my perfect price. We can definitely get a 2% pullback if it runs up like that. And two, Marauder Mondays, it can be rough if you get in too early. So that's for the week ahead here, Peter.
What's your expectation? It's going to go up or down? Are you in a bullish sentiment or a bearish sentiment?
My problem with my bull case is that I was expecting to get to 150 by now. I've always held out the possibility that it could take longer. I'm not like necessarily married to the price level. I have learned through a number of years of doing this that when people are anchored on a price, when people expect a certain thing, it often takes longer to occur than what you might think. Because if you can see it, then the market can see it as well. And the market is in the business of causing you the most amount of pain possible. Right. And so it's usually when you're out of hope when your position gets shaken, when you get liquidated, when you got no more, you go, I cannot take another trade. Boom. Then the trade you expect happens. No, it's not the magical thing. It's not some crazy thing. Oh, the market is aiming towards you. It's more that that's the dynamics of the market, that if you're feeling that way, there's going to be a ton of other people feeling that way as well. And so it's causing the most amount of pain to the most number of people. So my expectation was that we would get to 150 by September. Why? Because September, October is the quarterly options expiry. All right. Not to be too long-winded about it, but when options are purchased, this is people buying protection against either downside or upside moves, usually downside moves. So they buy insurance so that if the price goes down for the asset that they hold, that they don't lose as much, or they might even make money because it goes down. That's what the put option does. But those options expire, and they have to be constantly renewed. But there's a period between when they expired and when they renew where you're not covered, which means if the market goes down, then you have to rush to get that protection, which means you'll pay a premium, a large premium, in order to get it now. Okay? So there's 4 times during the year where the daily, weekly options are expiring at the same time in the same area as when the monthly expirations are happening, in the same area as when the quarterly expirations are ending. That means in 4 times during the year, there's this major period, this 2.5 week period where many market participants don't have any protection to the downside. So as soon as the price, if there's any catalyst that starts moving the price to the downside, everyone has to rush in order to get it. The people who had puts, they get to monetize that. Excuse me.
You are excused. I think something's been going around. I think everybody's getting sick. Everybody I know is getting sick now. Is COVID over?
So. No, it's the school season started. These kids, they come home and it's like they've been licking phone poles the entire time, just sick immediately. So you have this, I think they call it the quadruple witching, where all these expirations are happening at the same time. Plus, at the same time, you have the Fed coming out, and we have the Fed meeting on September 17th, where they're going to announce what they're going to do for cuts and all that sort of thing, and you know how they can move the markets. So the Fed can actually be a catalyst to the downside move, right? It just needs to be a technical drop. The technical drop causes people who are, can you imagine you're managing billions of dollars, and you'd be like, well, I wasn't protected. No. You go buy that protection right now. And so if you go do that, then those puts become, they increase in value right away, right? Because the volatility is up, and then because people are scrambling for a limited number of options, and so they'll bid up the price in order to get it right away. Well, as that happens, the market makers who are selling you the puts have to be neutral to the market. They can't be oversold on that position. They can't be overexposed on that position. In order to balance off that position, they have to sell futures. So they sell you the downside protection, and then to protect themselves, they have to go also sell the market. So as you buy the protection to the downside, you're causing the market to go down, the selling to happen, just mechanically. And what happens then? Those puts become more expensive, and the people have to rush in order to buy more exactly when they need it, right? It's like buying fire insurance when your house is on fire. You're going to pay top dollar. So that was always going to happen in September, October. The 2 periods of the year where this is most important is September, October, and March, April, because the 2 other periods of the year, December and June, people are on vacation. They're gone. They're not there to panic. They've already sold or whatever it is. And so I was always expecting September, October to be the area where I'd be looking, guys, we're at $250,000. Let's go ahead and take some money off the table as we look for the downside risk here, the downside move. Well, we didn't get the upside move, but the risk to the downside is still there.
Okay, so I'm going to make this painfully clear for you, Tom, okay? This may or may not be cyanide. Okay. And I want to know, do I take it or do I not? Bullish or bearish, right?
What you want to do is you want to put it in your mouth and just leave it there. Just let it soak in your saliva. And you don't think about it. You just don't think about it.
All right.
Well, I'll tell you this. There are two pieces of information.
Bullish or bearish, Tom? Bullish or bearish, Tom?
Neutral. Neutral is a position. I don't take any 50x leverage trades right now. Well, I did take a little bit at the bottom. I take it every week. I'm okay with losing the 2.5% of my position, but I'm not going to try 2, 3, 4 times. So I'm cautiously optimistic. Positionally.
Are you nauseously optimistic?
Look, when you are cautiously bullish, you take that 50x leverage trade. When you do, you move your stop loss up and you take your profits when you can. Right? You're not being ridiculous. That's all I can really say, because that's what the price is doing. I'm not going to sit here and tell you, oh, I guarantee $400,000 by the end of the year. Go ahead and put your college tuition in there. I'm all for you put in your kids' college money inside of the markets when there's a higher chance of getting that return, buddy. When there's a higher chance of getting that return.
Okay, I get it. So, so you're neutral. You think it's neutral. Why are you in this neutral state? What's causing you? Because before it sounded like you were pretty bullish and you're rolling over our poly market bets, et cetera, et cetera. What's causing you to feel uncertainty now?
So there's two major things that are bothering me. One, the length of time that Bitcoin stays in a bull market and stays in a bear market has been pretty consistent year over year. Let me say that again. The length of time that Bitcoin is bullish in a bull market and the length of time that it's bearish in a bear market has been pretty consistent for the last 3 cycles. I'll just pull up the chart here and see. So from the lows of 2015 to the heights of 2017, it's 1,064 days. From the lows of 2019 to the highs of 2021, 1,064 days. And from the lows of 2023 to now, we're at 1,026 days. So we're mid-October is when I'd be fully expecting, hey, now we should be looking for the downside risk here. Because remember, the drop from the peak, the way you know the guaranteed signal, you know that you're headed into a bear market for Bitcoin is that Bitcoin drops 50%. Well, right. I don't want to be sitting around here, the 50% drop, we made all this money and then 50% we have to give away before we go, oh, I guess it's the bear market. That seemed pretty stupid. So I was always going to go around this 1,064 days. Now the bear market is also pretty regular. This is not rocket science here. We're just measuring on the chart. From the peak to the low is 360 or about 400 days. This is a little bit variable, but you'll see. Again, the next cycle from peak to trough, about 365 days. So it's about a year that you're in the doldrums. Again, in 2022 to 2023, it's about a year, 378. So around 365 to 400 days is where this bear market lasts. So I was fully expecting October this year we sell, we sit on our hands, get the pullback. We're shorting all the way down till we get to the bottom, which would be a year from then, and then we next October, so not this October, but the next one, we would get in and ride it to the top. I'd be a genius. People are wearing t-shirts. Don't worship me. While inside, I feel a little bit coy about it. So. But the timing of things, folks, corrections can happen in time as well as in price. And we cannot let the price of Bitcoin, how long it stays in a particular level, we can't ignore that. It's an important signal. And just put it in a different way. Do you expect that Bitcoin is just going to drift up now forever? Well, no, we're still going to have these cycles, pullback cycles. So when are they going to occur? Well, they're going to occur when the price is forced lower. So we talk a lot about the global liquidity cycle. We didn't come up with it. From Cross-Border Capital, Michael Howe, Raoul Powell talks about it a lot. The Jeff Snyder, Uredall University, it's become a norm to think about the liquidity cycle.
Mm-hmm.
But there are other cycles in play too. There are business cycles, there are inventory cycles, there are credit cycles, there are population cycles, demographic cycles, and all these things can come into play and coincide in such a way as to cause movements within an asset space that we're not expecting in another way. So to put it in a different way, if Kamala Harris was president right now, I'd say Bitcoin is on 150,000 easy right now. And we'd be looking for the downside. It'd just be playing out like normal. But because we have a populist president,
okay,
because we have a populist president, because they would have printed money like crazy. They would have put to shame the money that the trillions that were spent during COVID. I think they wouldn't have put a stop to it. They wouldn't be kicking out.
Trump would totally print money. You guys not above printing money. What are you talking about?
Becent is.
Mm-hmm.
And the Federal Reserve hasn't been cooperating with the printing of money. And they also had the whole thing where they couldn't refinance the debt. One of the ways that they were able, the Biden administration was able to print so much money is that they refinanced the debt at short-term rates. Normally, the government lends out at 10-year more rates so that the interest rate that they have to pay is stable for multiple years. But they refinanced it at 2-year debt, 2 to 5 year debt, which means the Trump administration had to come in and they have to pay that debt back, right? Those bonds are maturing. They have to pay that debt back and then roll over the debt again at a higher interest rate. That's rough.
Wasn't the whole goal for didn't Trump have a plan to have to mess with that?
Yeah, tariffs, which throws a spanner in the works. Mm-hmm. The market doesn't know what to do with tariffs. There's been price increases in certain places, rejigging the supply chain, and then we go, well, when we heard about that last time, that was in COVID, and inflation went through the roof. Mm-hmm. Well, then it also turns out that he's doing that at the same time as he's putting a cap in the head of 1 out of 4 people and sending them out of the country with ICE. Okay. And then scaring the rest of the people. I think illegal immigration is down to like 0.
Through the
we need
border,
children in those mines, folks. We need the children in those mines.
I don't think we do.
Or at least that's what we expect to have. We expect to have the non-native, non-English speaking people being paid underneath the table in gray market and black market in order to sustain our economy. It just turns out that without those people, it's pretty disinflationary.
Okay, so you think that enough people have been deported or self-deported in order to affect Bitcoin?
Not just that. It's not just those people gone. So that has negatively affected the inflation that everyone was expecting to happen because of these tariff changes.
But that's
so
good. Negatively affecting inflation is a good thing.
Peter, what's good for us is what allows us to make money. Okay? Uncertainty and volatility in a way that we can't capitalize on or track, not good for us. I can't make an indicator that adjusts for tariffs and the subclass of human beings being deported from out of our country. Okay?
Maybe the Lord of Liquidity can.
Israel bombing Iran and the war in Ukraine, I got that stuff penciled in. All right? That's baked in right in the code of the indicators. No problem. You have 3 other wars, the price will just go up. I'll tell you exactly what will happen. Deport 5% of the country, or whatever the hell it is, of the working non-American class? I don't know. I don't know how to plan for that. So good, get that out of your vocabulary. Good is whatever makes the market move in the direction that we need it to move in. If we were decidedly in a bearish territory right around this time, it would be great. Donald Trump is tanking the economy exactly around the times that my indicator says it is. Print the t-shirts, don't worship me, let's move on with our lives. but that's not what's happening. It's weirdness that's happening right now. It's a weird populist, but not a pure populist move. Populist policies on the fiscal side. All right, so if Kamala Harris is there, we would have tons of money printed, more than Biden ever before. No one would say no to a Black, Native American, Latino, whatever, Indian, whatever, even what she is. She would have capital blanche to do whatever. Trump doesn't have that thing. So my problem, jobs. But then it's also the jobs. On the other side of the jobs is the AI. Thousands and thousands and thousands of thousands of good, white-collar, white-faced Caucasian people are losing their jobs.
Aren't they mostly like Indian and Asian? I don't know.
Peter, who do you think is sitting around buying Bitcoin? You think it's a bunch of Indians buying Bitcoin? It's Silicon Valley.
Yeah, but
it's
who's
Microsoft.
losing their jobs?
What?
Who's losing their jobs? Who's being laid off because of AI? You think it's
white-collar tech workers, yeah. So you got the white-collar being laid off and with no expectation that they're going to get hired back. No expectation they're going to get hired back. Massive and massive and massive layoffs. Thousands and thousands and thousands and thousands. See ya. Call into the office. Bye. No expectation that they're going to come back, even if rates get cut. And then you have the blue-collar class, which is fine. And then below them, let's call them the unsullied. They're being deported.
Okay, so is that accounting for all the job? What are the job loss numbers?
What?
What are the job loss numbers? Does that account for all of that? Okay,
so we just got jobs numbers last week, and there was a revision to. Sorry, we just got the jobs numbers last week, and there was a revision to June and July that made it that instead of having plus 43,000 or whatever jobs added to the U.S. economy, there was actually negative 17,000 jobs. I might be getting the numbers wrong, but I'm right in the spirit. Okay, that's bad. Then there was a revision to 2024 for the number of jobs that were created that last year. And there's actually 818,000 less jobs created than was reported. That's nearly a million jobs, massive jobs. Then you take a look at 2023 at the same time, and it looks to be something like 2.1 million jobs that were not actually there, that were miscounted. Yeah. Well, bad news is good news for markets, Peter. Normally, bad news is good news for markets, which is why we had the dollar go down and markets go up, right? When that news came out, we had a little bit of a lift in Bitcoin and in equities.
So don't take the cyanide. Don't take the cyanide.
Well, it all depends on how the market sees this stuff, because the jobs that are being lost are not like the regular jobs. They're the jobs of the people that we need for their 401ks and passive investing and buying the market and getting Bitcoin and getting hyped. Peter, you didn't see a bunch of migrants buying GameStop and AMC at the height. Okay. It's white people, folks. We need white people to have money in order for this to go up. We need it. So it's not happening. So it's the uncertainty that is causing me the trepidations. Okay. So the two signs were, one, the length of time for a bull market is around 1,064 days for Bitcoin. We're at 1,020 something. So October should be the top for Bitcoin for a year. And then two, the jobs numbers that came out is showing not just jobs are being lost now, but they were already lost. And we just haven't been counting it, which means it's Wile E. Coyote over the edge. And we're like, oh, wait, turns out things are way worse than we think. So those are the two things that worry me. The two things that make me feel pretty good is, one, there is no scenario I can imagine where the market drops 20% and the Trump administration doesn't just turn on a dime and go print as much money as we can.
This is it. Wait, whose choice is it? It's Trump, or you said, I thought it's the Fed.
Right. So that's the second thing. The second thing is that Powell bent the knee in Jackson Hole and decided, okay, we're going to go ahead and cut rates. Basically said that. The odds for the rates market is like 88 plus, or anywhere between 88 and 97% chance of cutting rates. It's more about how high are they going to cut rates. So now it's sort of like, okay, well, he's doing what Trump wanted him to do. Plus, this is the whole thing about Trump going after the governor board and the influence he's exerting on the voting members. We talked about this on Traders Post for After Hours last Friday. Go check it out. So we need a catalyst for Jesus to come through the clouds on a shining horse and a sword of truth and whatever. And if that's the wake-up call of 2 million jobs that are gone, and they go, hey, because of you, AI, we need universal basic income, and we need plans to help good Americans, and blah, 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 then that's bullish, especially as we're coming up to 2026 midterms. The Republicans are not going to want the market to be down during midterms. Goose that honey up, right? That's what happened last time. And you know why it happened last time? Because it happened every other time before that. And the times it doesn't happen, they have a turnover, or they lose way worse than they would have lost otherwise. So good news, bad news, good news. The fact that things are going badly and that we're seeing it means that the Fed has enough time to respond before September 17th.
All right. So what are your recessionary signals?
So you have as far as recessionary signals are concerned, there's all kinds that people can pay attention to, but there's only a few that I like looking at. One, you have the unemployment rate that ticks up. And the unemployment rate went recently from 4.2 to 4.3%. I know it doesn't seem like a lot, 4.2 to 4.3, but a 0.1% move in a different direction for the jobs market means that the trend has been changing for a while. So 4.2 to 4.3 means people are starting to lose their jobs, and people losing their jobs means less money circulated into the economy, less velocity of money, less credit being issued, more worry about the future, and then people extrapolate negatively in a linear fashion, and so they spend less, travel less, all that sort of thing. So unemployment rate going up is significant. Plus, if these numbers are to be believed, the 2.1 million jobs that actually should not be there, the unemployment rate should actually be way higher than it is. Way higher than it is, which means 25 basis point cut's not going to cut it, folks. We need 50 and more. We need QE. We need cowbell. So come to the rescue. So I don't think the market goes down 20% into the Christmas holiday season. They leave it there, and then things go well for 2026. People are going to remember they had no presents. People are going to remember they were scrambling for money. People are going to remember they didn't have a job. So I think Papa Trump comes in, puts on his cape, and everybody gets one.
So recession is good.
It depends how the recession happens. When people see the recession happening, then the Fed and the government can do something about it. So when we had a recession because of COVID, they instantly sprung into action, right? When we had a recession like in the global financial crisis, where people didn't even know where the debt was, right? Eventually it turned out, oh, it's the banks, but it started off with the housing market. People dropping off their keys in their mailbox going, see ya, because they were getting these no income, no job loans, these ninja loans, and people had houses they couldn't afford, and it was at the base of a Ponzi scheme, this house of cards. That you've seen Margin Call, you've seen I forget what the other movie is about it, but just
The Big Short.
The Big Short. When you don't see it happening and you don't know what's going on, and it's obscure credit products and structured products and things abroad or whatever, then you can't necessarily see that. And you don't know what to do in order to fix it. But once they do know what's happening, well, then they'll jump in right away in order to solve it. Well, not them. When the American people are loud about this is why we think it's happening, you can bet dollars to britches they're going to do whatever they can in order to make people feel better, especially as election comes up. So neutral bullish? 6, 7.
All right. What is the, and maybe you talked about this already, but maybe you can just say it concisely here. What is the bearish case for Bitcoin?
The bear case is that no matter what, the cycle plays out, and by mid-October, the price peaks and starts to fall and doesn't stop falling for 365 days. Nothing we need to do. That just would be the mechanical bull and bear case. Just that would just be how Bitcoin has acted every other time in every other market.
All right. So overall, you're neutral, but we haven't eliminated the bull case, the fact that we might go up. Bad things happening in the world, generally speaking, means good things happening in the markets. So that remains to be seen.
Yeah, if you can profit from it, if the markets can profit from it, because it means loosening of regulations, loosening of requirements, availability of capital, then it's good for markets.
You were expecting that around this time, September here, maybe beginning of October, is when we would see the 150 and things would go up. But if people are expecting that, and if that's what the charts are showing, the market has a desire to inflict maximum pain. And so maybe we've delayed when that top is going to happen, maybe before Christmas, in order to allow for good times to roll for Christmas to help with the midterms. But tariffs are uncertain. The revised job numbers are really bad. So it remains to be seen. Probably really important now to have some good indicators on your charts. I'm expecting.
Absolutely. And all I can do is provide the world's best indicators for free at sacredprofit.com. There's nothing else I can do other than that, Peter. I don't know what else to do. Do people want me to go door to door and like give them a computer and give them the indicators and show them how to use it? Because if that's what's required,
right,
I'll do it.
Okay, how do you feel? How do you feel about the people, before we wrap up here? How do you feel about the people who might be like, hey, look, I looked at your content. You made the bullish case for Bitcoin, 150 a Bitcoin. That's not happening. That doesn't happen. How are we going to feel about that? How married are you to your predictions?
I do what the indicators tell me to do. I learned a long time ago not to be married to narratives or wishful thinking. Yeah, it's fun to be like, hey, this is the top side risk, especially since the downside risk I already knew. It's like around $43,000 is as low as Bitcoin can go. All right, if it gets there, who cares? I care more about being able to be there at the top and to time the bottom. So I do what the indicators tell me, what price action is telling me. If you've seen anything other than that, you're ridiculous. I do think crypto as a long-term asset, that it's the thing to hold, the thing to buy. Why? Because it's made by intelligence agencies and designed in order to be an off-ramp for the existing system, in order to move everyone from the failed system to the new Big Brother control. And because of that, there's something I believe in more than government overreach. But in the short term, we have to make our own decisions. And that has to do with what goes on a day-to-day. And the only thing you can do for that is take a look at price and price action. And the best way of surfacing that information is with the free indicators at sacredprofit.com. Head over to sacredprofit.com, sign up, and you too can be sitting with an oracle at your fingertips.
Sacredprofit.com is not only good for the indicators, it's also good for the signals, the trend signals that let you know in the short term where to expect Bitcoin. So I don't know what kind of trading you folks are doing out there, but that's pretty cool. And like and subscribe if you like this content. If you have any questions, you can post them in the comments down below, and or find Sacred Profit on X, and we'll interact there. Look, The Lord of Liquidity speaks to Tom, to Sacred Prophet, and Sacred Prophet will tell you what he sees. And that changes, he'll tell you that. But what he won't do is lie to you, because lying is the anti-indicator.
Whoa. I would lie if it benefited me, and there was no way to bring everyone with me. I'm sorry, did I make it seem like I wouldn't lie? I would absolutely lie.
Right.
If I were to profit majorly. But I haven't profited majorly.
Okay.
And when I do profit that way, I'm going to tell you to your face I lied to you, because I'm transparent that way, Peter.
Okay, good.
I'm very honest.
I appreciate it.
In my lying, if it brings me money. But if it doesn't bring me money and it's just about status or joy or whatever, that's not going to happen.
All right. Cool. Anything else?
No, that's it. Look. It's an interesting time to be alive. My indicators were telling me this whole time, look, this is what's going on. Red on the short term, middling green on the long term. Take it for what you will. It's interesting to me that we haven't had a blow off top. And it makes me think, hey, what if we get a truncated bear market where that also doesn't go as low as we think, and it rips from over there? I don't know. All I want to do is see shorts get ripped. I want to see them get completely wrecked. There's 20% up. I'm going to look at that. I'm going to see the longs be longer than the shorts, more longs than shorts. Then I'm going to join the bears on the bear side, and you could have a very different year for Sacred Prophet when I'm on the short side, folks. Burn those burn the bulls.
Oh, by the way, if it is the top and we start going down, are we expected to make money when it goes down as well?
Way more money on the way down, because no one's gonna be holding for like blue skies on the way down. And when we're in blue sky territory, we have no technical levels. We don't know what levels to reach for. Sure, you have FIP extensions and all that sort of thing you can go by, but these are all psychological levels. There's no actual orders sitting around on those levels. But on the downside, plenty of levels, all those daily levels, all those weekly levels, all that matters. All the way down to like the 15-minute levels that matter. So, and then the bounces you get can be so dramatic that you can make 5-10 times your money just within the volatility that happens on the lower level. So I'm super excited for that, just to be able to hold this long-term bearish trend and also take scalps in the middle of it, swing trades in the middle of it in order to make a ton of money. It's what I've been waiting for. You think I want to be long in the blue sky just hoping, I wonder if today's the top? No. I want the price to go down. At a time and a place of my choosing.
All right, folks, if you're thinking this is the top, or if anybody confirms that's the top for you, come back to this channel, because the party has just begun. Sacred Prophet, thank you so much. Really appreciate it. Play us out.
All right. Don't worship me, folks. I'm just a voice for the Lord of Liquidity. Wonderful. Wonderful to be me, Peter. Have no doubt. This is AI, folks. This took so much job.
Step in the pulpit. On the beamer, but my cadence is Detroit raw, split Caesar spread.
They're there now.
Don't crown me king, I'm the courier.
Did you see
I've never
Kathy
tasted
Wood?
the milk and honey, just clear the golden path.
Kathy Wood, no.
The Ark Invest, did you see it? You should check it out.
Why would she
Pretty
say
good. She was like, look, we didn't get the inflation, but we didn't get the explosive thing. Like, I think that's going to come, but we're in a whole new territory now. It just shows the charts, it shows the velocity of money, it shows the adoption rate for different things, it shows whatever. And it's weird because you have 7 companies or 10 companies making all the money, and everything else is flat. Bitcoin is acting like the other L1 coins. Just like nothing. You think Bitcoin had no adoption? Right. Like, even though we had a new high recently, like, these rises up are nothing compared to what we saw in previous bull markets. So, I guess we'll see. I think we're going to break out that Bitcoin's in a bull flag, and that we're looking at the chart wrong, and it's going to, as much as it's gone up so far in the history of Bitcoin, this is what the next leg up is going to be. Just fucking straight line. People aren't going to know what to do.
I guess we'll see.
That's what I think happened.
All right, don't let me keep you, man.
All right, later, man. Thanks.
Something they can actually use. This is the system I wish I had starting out. Now it's yours.